Alright, so measured movements on trendline breaks or any sort of channel break, but before I go into that, let's just clarify what I need to clarify. So in the market, it's usually in one or two types of environments. It's either in a channel or it's in a drive, which is just still a channel. A drive is still a channel. It's a lot more unidirectional. Uh, and it's just price traveling with a lot more conviction because of some sort of fundamental backdrop or perhaps some sort of data has been released. And then once price goes into this parabolic channel, it usually exhausts and then creates another channel or a wedge or a expanded channel. It's usually in one of these sorts of forms. Now, this is just a 5 minute chart and it's exactly the same whatever chart you're on. Okay. So here you have a channel. That was badly drawn. Here you have a channel. That channel is broken with a slightly parabolic channel before going into another sideways channel. And then the sideways channel is broken, which puts us into a descending channel. That is broken, puts us into a sideways channel before we get that parabolic drive down. Sideways channel, parabolic move down, before finally going into another sideways channel. So if we understand now that price is in it usually goes from channel to drive to channel. In the most part, then what we want to do is we want to be able to figure out when that drive is going to happen, and then set orders in or set market orders in when we think that drive is going to happen, and then we want to sell before we get trapped into that channel because when you're trading in channels, you can often get whipsawed, and it definitely is possible. But if you're a scalper, then you just want to be sniping these drives rather than trying to get bounced around by the channels, which you might be, it's like a 3 pip distance from here to here. So you just want to figure out when this event is going to occur, get your orders in, and then sell as soon as this occurs. And you might be missing out on further upside, but who knows, because this could come straight back down and just come back to the spike base. So one way that you can sort of accurately forecast price is when you see price traveling in this channel, and you notice that it's going to break, or perhaps you're looking at some sort of intraday pattern that is giving you the idea that price could potentially break. Then what you can use is you can use measured movements, and all this is just Fibonacci retracements. So if I just find a few examples. So here. It's not the best example because this was sort of such a large injection of demand which slowly faded, which often it does. If there's no reason for the demand fundamentally wise, then a lot of the times price will just fade. But the premise is still the same, so you can measure from, that's not a Fibonacci, you can measure from here to the highest point of the break, so the point where it exactly just breaks, to the lowest point of this leg. There's other ways you can do it. You can measure it from but here's the first example, is just measuring it vertically down to the leg. And then your 2 tick profits are 1618 and 2. So both of them will hit there quite cleanly as well, with a lot of conviction. A lot of the times though, price will usually sort of gyrate towards here and then sort of fuck about, and then before finally going back up, before price finally exhausts around the 2618 level, with some sort of triple top structure before coming down. Here we have just another simple here we have another simple trend line break. Just measured from here down to the bottom, and here you can see a bit more clearly that in this method, when you're just measuring directly from the trend line break down to the bottom in a vertical manner, you don't have much yield because you don't have much range to work with. So I'd always try and go for the 2 range, but you can still go for the 1618. But this is on a 5 minute chart. You got to realize, so you really aren't waiting that long. And so if you look at the 2 level, how price sort of fades at that 2 level, and the 1618 level, we get that red candle, and all that shows is that your price targets are being well put, because that's where other people are selling as well. And of course you did miss out on that overall move, but as a whole you will probably capture the bulk of the movement. So again, here we have another trend line break, and you can do the exact same thing, measure from the break down to the last leg. Now obviously, because this is so small, you're not going to get much yield, so I would measure all the way down here, and you can see at the 1618 level, price hits it and then fades all the way back down to retest this before finally hitting the 2 level. Here is USD Swiss. So right there we did it out of trend lines, but you can also do it from the channels that we were just talking about. So like I said before, this is on the daily chart, but price still behaves in this sort of fashion where we have a channel. The channel is broken, goes into quite a parabolic channel before exhausting and creating a wider form channel. Now, if you're looking at this and you're thinking, you see that these candles are showing quite a lot of conviction and this channel could break, then you want to know where price could actually go. And so you see that your 1618 level is hit and your 2 level is hit. And if you look where the 2 level is hit, price actually begins to fade and starts to attempt a recovery. Now, it obviously doesn't because we're looking at this in hindsight. But when you're seeing 3 green candles in a row, you're going to be thanking the 2 level for getting you out with that trade. And even though you did miss the lower move down, that's fine, because at that point you're already looking at other trades. For example, this channel here, you notice a break on that, so you whack your fib in. That's not a fib level. So you whack your fib in. Where are you taking your profits? Right there. And there. Look at that. You hit the 1618 level, price fades. Then it comes up, and you hit your 2 level, and then price begins to fade again. So if you're sitting your final 2 profits at the 2 level, and then you're watching this occur, you're just going to be, in some sort of euphoric state. You're going to think you cracked the market. All right. So you can use your measured movements on channels, trendline breaks, any sort of environmental transition. I'm not going to go too much because environmental transition is quite a complicated topic, and I'm not going to try and gloss over it in this short video. That it's sort of beyond the scope of this video, but it is something just to be completely aware of, and something that you can incorporate into your strategy. Whatever strategy you've got, just understanding that environment switch. Here you have another example. This one looks like it could have failed. So you would have captured the 1618 level here. Now, of course, you wouldn't have captured the initial move down, and that's what you're mainly focused about, because then you're sitting through this pullback, which you don't really want to sit through, waiting for this further move up. And it's not a perfect math. If it was, then no one would lose in the markets, and then you don't actually hit your 2 level. But you've still got to realize that this is on a daily chart, and the amount of pips that you're sort of managing to grab here is pretty insane. And then there's, of course, since this is on the daily chart, you could therefore go into the lower time frames charts and grab yourself better entries, or grab yourself more precise take profits. But yeah, perhaps if you notice this high here, then it would have been a bit more smarter to set it there, just below the 2 level, and maybe you managed to get that chart. Let's look at some from cable. So the 30-minute chart of cable, see if any can be spotted. So what I see here is a pretty bad example, but we have a range here, or a channel. That channel is broken. What we get a spike in price, and we didn't actually manage to capture the entire leg in price, which is fine. Here we have another channel. and then we can measure from this leg and price to us. I don't know why I keep doing that. We can measure from here to here. Alright, and then you're getting your 1618 here and your 2 here. Now, it differs how you draw your channel, and I understand that I'm doing this in hindsight, and if I just try and find some examples where this wouldn't work, just so that you know you aren't sort of thrown off by this. That I'm not trying to say that this is some sort of foolproof tactic. The chances are you will sort of get put on your arse quite a lot of the times, but as a whole, this is, you know, as about as accurate as it gets. All right, I probably, if you took this, thinking that, so this is some sort of expanding channel. I mean, it doesn't really break ever, but let's say you had a drawn like this, which is why I don't really like trend lines. I think they're really, really subjective, because you can ask 3 different traders to draw a trend line and they'll have something different. So trend lines are very subjective, and you just got to be very careful with them. But you can see that if you went long here on the break of this, now the candle didn't even close above it, so it's not really a very convincing break. But let's say you did go long on this, then obviously you would have been burned here, which is fine. I'm looking at this range environment here. And then we sort of have a this type of structure, so I'm not going to bother drawing a trend line on it, but I'm just going to measure it from the lowest point to the highest point. Oh, fuck off. Right. There to there. And notice how on the 1618 level, price actually fades all the way down to retest, which, you know, you could at this point. So we hit the bulk of the 1618 move before retesting, which, you know, you could potentially re-enter for that push up to 2. So there's lots of different ways you can use this strategy, and I have sort of glossed over them, but I just wanted to try and explain how you can more accurately bring some forecasting to your price targets and whatnot. I don't really believe in numerology because I think that Fibonacci levels have no inherent value in the market because of what they actually are. I think the only reason they're valuable is because a lot of people use them, and a lot of algorithmic trading base their trading around these levels, and so that's the only reason I use them. But yeah, cool.